All right, today we're going to do something super practical. We are taking a real-world crypto trading strategy and we're going to tear it down piece by piece so you can see exactly how these things are built and what they're trying to do.
You've probably seen these, right? These trading plans floating around online. They're full of numbers, zones, targets, and you just kind of stare at it and think, okay, what am I even looking at here? How is anyone supposed to read this?
Well, that's exactly what we're going to do today. We're going to pull back the curtain on one of these plans. We'll be decoding a complete trading strategy for the cryptocurrency XLM, using this document as our roadmap. So let's be clear. Think of this thing less as financial advice and more like a blueprint, or maybe even a battle plan for navigating a trade. The whole point is to bring some structure, some order, to what can feel like a totally chaotic market.
Okay, so the first thing you have to understand is the reference price. It's the anchor for this entire plan. Everything we're about to look at, every single buy and sell number is calculated from this one starting point, XLM at 25 cents.
All right, so first things first. How do you even get into the trade? Well, this particular plan uses a really popular strategy you've probably heard of, dollar cost averaging, or DCA for short. Let's break down what that actually means. So for anyone who's not familiar, DCA is all about managing your risk. See, instead of just dumping all your money in at once and praying you pick the right moment, you break it up. You buy in smaller chunks at different pre-planned price points. The big idea here is to average out your cost and kind of smooth out the bumps from all that market volatility.
Now, this is where it gets interesting. Check this out. The first buy zone isn't at the current price of 25 cents. Nope, it's set lower at 23.75 cents. That's a 5% drop. Right away, that tells you something. This strategy isn't about chasing the price. It's about waiting for the price to come to you.
Okay, but what if the price keeps falling? Well, the plan's got an answer for that. The second buy is set for 21.2 cents, which is a much bigger drop, 15% from our starting point. You can really see the DCA idea at work here, right? You're averaging down your total cost.
And then we have the third and final entry point, way down at 18 cents. We're talking a major 28% dip here. This is the classic buy the dip idea, but it's not based on a gut feeling. It's built on specific, predefined levels to take all the emotion out of the equation.
And here it is, the whole entry plan laid out perfectly in one spot. Just take a look. You've got 3 separate zones, and each one is tied to a very specific percentage drop. It's a super clear, tiered system for getting into a position without panicking.
Okay, so that's the plan for buying. But look, knowing when to buy is only half the battle. You absolutely have to know when you're going to get out. So let's flip over and look at the exit strategy, the plan for taking profits.
And this is so important. A trading strategy without an exit plan, that's not a plan. That's just a wish. This document gets rid of the guesswork by defining exactly when it's time to sell.
So target number 1 is set at 30 cents. Remember our starting price of 25 cents? That means this first target is a solid 20% gain. It's a clear, pre-planned win to lock in some early profit. From there, the next target gets a little more ambitious, 36 cents. Now we're talking about a 44% gain. And notice, it's the same tiered approach as the buy-in plan. You're not selling everything at once.
And then we have the big one. The final profit target in this plan is 43 cents. That's a huge 72% jump from that initial reference price. This kind of structure lets a trader capture profits at different levels of a potential rally.
And boom, here's the whole exit plan, clear as day. Just like the buy zones, the sell targets are specific, they're calculated, and they're designed to take all the emotion and second guessing out of taking your profits. See how they work together? The tiered entry manages risk on the way in, and the tiered exit secures gains on the way out.
But hey, a plan isn't just a bunch of numbers. You need rules on how to actually execute it. In the source material, they call these the strategy notes, but I kind of like to think of them as the rules of engagement. And these 4 guidelines are absolutely crucial. First, use limit orders. That means you set the exact price you're willing to pay or sell at, so there are no nasty surprises. Second, you gotta monitor volatility and liquidity. Basically, is the market going crazy, and are there enough people trading for you to get your order filled? Third, and this is personal, adjust your position size based on what you're comfortable risking. And fourth, maybe the most important, always be watching the price and keeping an eye on the news.
Okay, and that brings us to what might be the single most important part of this whole document, the warning. Because a good plan doesn't just fantasize about profits, it looks the risks right in the eye.
And this is a direct quote from the source material. It's simple, but man, it is powerful. Crypto markets are highly volatile. That's it. It's a stark reminder that this is not a magic formula for getting rich. It's a structured way to navigate a really, really unpredictable world.
So to deal with that volatility, the plan gives two final safety rules. First, you have to follow the price action closely. This is not a set it and forget it kind of deal. And second, use a stop loss if you need one. Think of a stop loss as your emergency eject button. It's a preset order that automatically sells your position if the price drops below a certain point, protecting you from a potential disaster.
So when you step back and look at the whole thing, the entry points, the exit targets, the rules of engagement, and the warnings, it really makes you think, doesn't it? In a market that's famous for being completely wild and unpredictable, maybe a clear, disciplined, unemotional plan like this is the most valuable thing you can have.